Good afternoon, ladies and gentlemen. I, Fahad, Irfan, the Head of Research at Alfalah CLSA, welcome you to the Alfalah CLSA Chemical Week. Over this week, Alfalah CLSA will host 7 leading listed chemical players of Pakistan who will discuss the opportunities and key issues of companies in the sector. Today's session is on Lucky Core Industries, and the speaker is Mr. Atif Aboobakar, the CFO of the company. Ladies and gentlemen, the first part of today's meeting basically would be the presentation, which would be followed by the question and answer session, for which I would request you to please use the chat box. Over to you, sir, for the presentation.
Thank you. Thank you. So, Bismillahirrahmanirrahim. Assalamu alaikum to everyone. So the flow of the presentation should be that I will brief you about our businesses, our performance till YTD September, which will be followed by opportunities and challenges which we are looking at this point, and then it will be followed by a question and answer session. So I believe everyone can see the presentation. So our legacy continues with the same logo which we carried previously, but now we are LCI, which is Lucky Core Industries. Everything remains the same. So the same structure of governance where owners are separate compared to the professional managers, same diversified businesses with strong cash generating ability, strong balance sheet to fund our organic and inorganic growth projects. So our legacy continues with the same businesses. So our businesses, soda ash is the biggest business in terms of top line and bottom line as well now. Polyester is the second one, pharmaceuticals, animal health, chemicals and agri, and infant nutrition. So through these businesses, we serve a diverse range of industries, which includes textile, paints, appliances, construction, automobile, footwear, food and beverage, pharmaceuticals, and many other sectors. So the major highlights for these 9 months was that we were shortlisted as one of the successful bidders for Lotte Chemicals acquisition. We entered into share purchase agreement in the process of approvals and all such regulatory processes under process. Soda ash business recorded 9 months sales and production of 368,000 tons and 381,000 tons respectively, with a growth of 7% and 15% from SPLY respectively. Our EBIT standalone increased by 20% compared to same period last year, and profit after tax was higher by 168%. In third quarter, polyester demand rebounded along with the healthy unit margins, which was not seen in the first 2 quarters of the year. We sold 26.5% shareholding of Nutrico Morinaga. Transaction was concluded in January, and we recorded a capital gain of almost 9.8 billion. Soda ash business commissioned 60 KTPA light ash expansion project in March 2023. Now our annualized capacity is 560,000 tons per annum. Pharmaceutical businesses face challenges along with the entire sector, with significant rupee devaluation and imposition of sales tax, which is not in the form of value-added tax and is non-adjustable, becomes part of the cost, which impacted the profitability of pharmaceuticals. And we have seen significant devaluation of PKR and increase in policy rate, which has increased our financial cost and exchange losses in profit and loss account. Numbers across our businesses: soda ash in 9 months recorded a top line of 30.2 billion, polyester almost 30 billion, pharmaceuticals 6.7 billion, chemicals 8.6 billion, animal health 5.3 billion. So all across the board, you can see that there is significant growth barring pharma. Soda ash growth was basically driven by higher volumes because we installed our 75 KTPA in June last year, which had an impact of higher capacity. And then in March, we have installed 60 KTPA further. So total top line of LCI for 9 months was 80 billion rupees, which is 29% higher. In terms of profitability, we generated an EBIT of 10.4 billion rupees, which is again 20% higher versus same period last year. Major contributor again was soda ash business, which generated an EBIT of 5.5 billion, polyester 2.1 billion, pharmaceuticals 812 million, chemicals and agri 1.25 billion, and animal health 715 million rupees. In terms of consolidated performance, so basically there is normally an addition of Nutrico, but as I informed that we divested the Nutrico business and now we are holding 24.5% of shareholding of Nutrico. So it is not being consolidated in the financial statements and is now will be shown as investment in associates in equity method. So this 80 billion top line does not include Nutrico, but 72 billion of last year included Nutrico because last year it was our subsidiary. So 11% higher compared to same period last year. Our EBIT is 3% higher. Again, EBIT of last year included Nutrico, but this year as we divested the controlling interest, and that's why it doesn't include it, but still it's higher by 3% compared to same period last year. Had we included net turnover and operating result of Nutrico for this year as well in our consolidation, our top line and bottom line would be higher by 23 and 15% respectively. Historical performance since YBG's acquisition. So we have consistently grown over the years. In last 10 years, we have generated an profit after tax CAGR of 18%. Last year, we closed the year at 6.24 billion rupees of profit after tax. This year in 9 months, last year in 9 months, it was almost 5.5 billion. And this year it is 14.6 billion, mainly because of divestment of Nutrico and recording a huge capital gain in that transaction. So our IRR on this investment, because YBG acquired this business 10 years ago almost, so IRR since then till now is almost 15.1%, whereas PSX 100 has given a return of 10.4% and KMI 30 10.2%. So significant overperformance versus the indexes. Moving on to soda ash business. So soda ash business, when YBG took over this business, we had a capacity of 350,000 tons per annum. We completed two 75 KTPA expansion, one in 2019, another one recently in 2022, and we reached a capacity of 5 lakh tons. Simultaneously, we installed coal-fired boilers 1 and 2, 3 and 4 in 2 phases to make us energy efficient and sufficient as well, because at earlier periods there was gas supply issue as well. Then we completed 60 KTPA expansion, as I informed recently in March, and CFP 5 was also completed. So now we are at 560,000 tons capacity. This business has got the major portion of investment. 24.5 billion was invested since YBG's acquisition in this business. Historical performance of soda ash. So last year we closed at 25 billion of turnover. So CAGR of 18% in terms of revenue. In terms of EBIT, CAGR of 10%. In terms of EBITDA, CAGR of 8%. Last year we closed at an EBITDA of 6.03 billion in soda ash business. In these 9 months, we have actually crossed last full year's performance, where we recorded 6 billion of EBITDA. This year in 9 months, we have recorded almost 7 billion rupees of EBITDA, which is 61% higher compared to same period last year. Top line of 30 billion versus 17.5 billion in 9 months, same period last year, and operating result of 5.5 billion in 9 months, same period last year. The major achievement was basically export sales. So we exported almost 40,000 tons of soda ash and generated $16 million of foreign exchange. And we exported to a very diversified set of countries, including Sri Lanka, Bangladesh, Saudi Arabia, UAE, Indonesia, and various other countries. In polyester business, we have achieved a CAGR of almost 21% in terms of top line. Polyester business was the most difficult business 5 years ago, 6 years ago, but today it's a sizable contributor in overall profitability of LCI. Last year, we closed at an EBIT of 3.96 billion and EBITDA of 4.58 billion. So this year in 9 months, there is a decline in operating result of polyester business, 2.1 billion of EBIT and 2.7 billion rupees of EBITDA. Obviously, last year there was significant increase in commodity prices, which was happening across the globe, and we had recorded significant trading gains, which are not to that level as we have seen in last year, though our capacity utilization is still full at 100%. Pharmaceutical business, 16% CAGR in terms of revenue, almost 9 billion rupees of revenue was recorded last year and full year. 18% CAGR in terms of EBIT and 19% CAGR in terms of EBITDA. 1.4 billion rupees of EBITDA was recorded in the same period in the full year 2022. In terms of financial performance, it's basically has grown significantly over the last 3 years. 18th largest pharmaceutical business in the entire pharmaceutical universe. Now we have this business. Operating result has declined, and mainly, as I explained, because of significant cost increase, devaluation, inflation, and imposition of sales tax. Recently, we got an entire pharmaceutical industry has been granted a one-time increase of 20% for non-essential non-essential pharmaceutical products, and 14% for essential pharmaceutical products, which will be applicable from next year when new manufactured inventory will come into the line. So an EBITDA of 941 million rupees in 9 months during the current year. Animal health business. So again, this was the business which struggled because of imposition of ban on RBST Sumatec in 2019, but has gained since then significantly. So last year we recorded a top line of 5.6 billion, EBIT of 760 million, and EBITDA of 830 million rupees. It has grown, EBITDA has grown at a CAGR of 11%. And this year, again, that growth momentum has continued. We have delivered an EBITDA in this business of 772 million versus 651 million in same period last year, which is higher by 19%. Top line has also grown. EBIT has also grown by the significant percentage. Chemicals and agri, we have seen continuous growth in this business as well over the years. So 11 billion top line we closed last year at 8% CAGR for last 6 years. EBIT CAGR was 14%, 1.46 billion of EBIT, and EBITDA at 1.57 billion, which was 14% CAGR in the last 6 years. So this year, the growth momentum again continued for 9 months. We delivered an EBIT of 1.3 billion and EBITDA of 1.34 billion, which is 5 and 24% higher than the same period last year. Nutrico, so we completed this transaction in January where we divested 26.5% shareholding, almost 21.8 million shares. The transaction was finalized in USD and it was $2.07 per share. We received $45 million, which got converted to almost 11 billion rupees. And we had a cost for this investment at 2 billion rupees. So we recorded almost 9.8 billion rupees of gain. And now we continue to hold 24.5% of shareholding in the Nutrico Morinaga business, with majority is now with Morinaga Japan. And obviously, now the alignment is complete with the brands, and majority ownership is with Morinaga Japan, which actually will contribute to the success of this business. And hopefully our 24.5% remaining shareholding will also yield very good results in the future. So performance of Nutrico Morinaga, 11% increase in top line, both in the last year and in the current 9 months versus same period last year. EBIT is 23% higher in these 9 months, which is 1.75 billion versus 1.4 billion, and EBITDA at 2.04 billion versus 1.7 billion, which is 20% higher. So the business is continuing its growth momentum. However, the recent inflationary impact which we have seen in Pakistan and significant devaluation and high interest rates have impacted the performance of the business, but still it's growing. So our growth journey continues. As I explained, we have signed SPA with Lotte Chemicals Korea, and the process is underway for getting CCP approval, and then further formalities will be completed for acquisition of 75% shareholding. Joint venture with Tariq Glass related to float glass company has been formed, but the project has been on slow speed because of LC opening issues and the current economic situation which entire Pakistan is basically facing. Soda ash expansion, so basically coal-fired boiler, another coal-fired boiler is under way. We are designing that coal-fired boiler for the time being, and then probably we will embark upon installing another coal-fired boiler. And dense ash capacity expansion will also be underway. There is another small investment where we are converting our leased animal health facility to our owned facility, where we can manufacture further higher volumes, because we are seeing good demand coming in future years, so we can introduce new products as well at our own manufacturing facility. Strong debt profile. We have strong cash generating ability throughout all these years. LCI has been continuously paying dividends, making investment, and still our debt has not increased significantly. Currently, our net debt stands at 9 billion rupees, and debt equity percentage is 19% compared to 81% equity. Strong balance sheet, strong credit rating, AA for long term and A1 plus for short term by the credit rating agency. Expansion projects. So since YBG acquisition, we have completed various expansion projects which are visible in blue color. Major ones, obviously, we have completed our expansions of soda ash, which I explained. We acquired Syren Pharmaceuticals in pharmaceuticals and plant and certain brands of white we acquired in 2017-18. The JV with and green ones are basically those which are underway currently. JV with Tariq Glass, acquisition of Lotte, CFB6 dense ash, master batch. We are installing an extruder, a small extruder in the master batch, and a new medicine plant which will be converted from lease plant currently to our own manufacturing plant. So that's it from my side. I welcome question and answers from your side.
Thank you, Atif Saab. To all the participants, as I had mentioned, the chat box is open. Please feel free to write in the chat box. Until we get questions from participants, I would like to ask the first question, which is related to the company's view on which vertical do you see to deliver the most growth over the medium term amongst the many businesses that the company has right now?
Yeah, so basically the major one where investment happened is soda ash business, because next year we will be having full capacity of 560,000 tons. This year we didn't have the full capacity because the last leg in March. So we will be having further opportunity to export our products as well as to serve our local market, because this year there was a requirement for local market which we fulfilled and were unable to export at our full potential. And next year, hopefully with that higher capacity, we will be having that potential. Plus, you will see pharmaceutical with these recent price increases given, though these are not sufficient in terms of what we have seen in the form of inflation and the sales tax impacts and cost impacts. But still, it will be a good breather for pharmaceutical, and the performance will improve compared to the current year, I would say. Rest of our businesses will continue to grow as per their own growth pace. And luckily, we exist in our essentials, which are required in Pakistan. So basically, those essentials will continue to operate. And luckily, we are not in cyclicals, so the impact will be much less on our company levels.
Okay, so sir, following up on what you answered, what is the biggest export market for soda ash?
So currently, Bangladesh is the biggest export market in terms of volume, but we have actually explored some smaller markets this year as well, as we got the capacity. Or hopefully, we can see that those markets will become large in the coming year, because we now be having higher volumes. So currently, it's Bangladesh, Sri Lanka, which are the two biggest ones. And going forward, probably others will also open up.
Okay, so as expected, we have a couple of questions related to the Lotte Chemical transaction. So The first question basically relates to the arrangement of foreign currency to basically go ahead with the transaction of Lotte Chemicals. There's a concern on how the company would manage the availability of dollars. And secondly, the question again on Lotte Chemical deal is to when should the investors expect the deal to close? If you can shed some light on.
Yeah, so basically regarding the first part, our SPA is actually in PKR terms, not in dollar terms. So basically we signed an agreement with Lotte Korea. And regarding the deal closure, I would say currently the CCP process is underway. And as you can see, the situation in Pakistan, uh, things are getting a bit delayed. So I can't comment on exact timeline when the deal will close, but actually uh, once the CCP process is through and once the other conditionalities given in SPA are complete, then probably the next phase of public offer will continue, and then after that the deal will close. Timelines, obviously, in these uncertain times, no one can comment on the timelines when it will close. That's a difficult.
Also, what we are seeing every day is, issuance of new bonus shares. So there is a question on that as well. On what is company's view on it? Is there any plan?
So let me explain this. So as we are, there is no confirmation whether this tax will be imposed or not. We are seeing in news that this will be imposed. But there is another news probably that the companies which have not paid dividend, this will impact those companies. So luckily we are out of that ambit because we have been paying dividend consistently throughout the last 3, 5. Every year we have paid dividend. So yeah, there is an issue, but obviously we are also working on it internally, and probably we will see in the days to come if we follow that route, or probably we will continue as.
Thank you. And again,
But
coming
logically taxing reserves, I would say, is not the right way, because most of those reserves have been generated over last many years, decades, I would say. And those reserves have already been invested in plant and machinery, expansion of the company, working capital. So as I've shown previously in my previous slides as well, that we are in net debt situation. So we carried a net debt of 9 billion rupees. So we don't have a surplus net cash, though we have reserves, but we don't have cash because we have continuously invested. As I explained, 24.5 billion was only invested in soda ash business over these years. So yeah, those investments were made. So reserves actually have already been invested. Now, this will not be possible that complete reserves can be distributed in the form of dividends. So I would say that we need to first study the law, how it's drafted, because this law, as explained in newspaper items, it doesn't appear correct, I would say.
Agreed. And has there been any change in the price? I'm talking in reference to the lot cam deal.
So no, there is no change. We entered into SPA. SPA was signed by both the parties, and that's complete SPA. So now what happens is basically there are many ifs and buts, and those ifs and buts are that when the transaction gets concluded, how much cash will be generated by that business till then, what will be the working capital available at that point in time. So determining the price was not easy at this point in time because of so many variables. And hopefully it will be determined, because we don't know when the transaction gets completed and what will be the cash situation in Lotte and working capital situation at that point in time.
All right. So in terms of the expansion and joint venture in the glass business, I mean, what kind of demand are you expecting in this product? And also, is the company planning on making any specialized glass or the similar floor glass that is currently in the market that is being made by Tariq Glass and other competitors like Vani?
Yeah, so I will answer the second part first, that it will be floored glass only and not any form of specialized glass. But floored glass has many variants. It has a floored glass has a colored glass. It has a different strength of glass, for example, 5 mm, 10 mm. And basically, there are different requirements of the customer, but it will be completely flowed glass. So it will be obviously a competition with Tariq and Vani. The first part basically regarding the project. So it's in the first phase, it will be 500 tons per day project, which will be expanded to another 500 tons per day. Demand, actually, when we announced this project, we were seeing a very good demand because construction was going on in such a boom with the housing projects being announced by the previous government. But recently, obviously, we have seen a decline in demand, and the situation is tough. And that's also one of the reasons. But the major one is basically that we can't open LLC for this large project at this point in time. So yeah, there is no rush in terms of installing the plant because demand has slowed down. And probably when the interest rates will come down at some point in time, we will see revival of demand. And hopefully we are monitoring the situation when to embark upon the operations.
In terms of, and what is the overall capital expenditure on this?
So capital expenditure at initial point when we determined it was around 18 billion rupees, but now things have changed significantly, and the things are changing significantly on a daily basis. We don't know when we start this opening of LC, what will be the rate of dollar, what will be the foreign currency, steel prices, cement prices. So things are changing on a daily basis. But initially, when we announced this project, it was around 18 billion rupees.
And this the glass business, as in there's a question if it is going to cater to the automotive glass, the car windshield, etc., or is it not?
Initially, it's floored glass. Initially, it's floored glass used in construction because now most of the construction, modern construction, is basically using glass, and the size of portion of glass is much more compared to glass which we have seen.
Okay. So, and sir, there is a question from our client on the current prices of soda ash, if you can share them in terms of PKR potential.
So current prices of soda ash are ranging from 94,000 to 96,000 per ton for different soda ashes, light ash, dense ash, and RSB. So 94 to 96,000 rupees a ton.
This is, I mean, the export. This is the average price.
This is the local selling price. This is the local selling.
And in terms of exports, if you can.
So exports, basically, it depends upon different countries have different prices, different customers have different prices. So somewhere around $320 probably is the somewhat average price.
FOB price.
Yeah.
All right.
300 to 3.
All right. So, I mean, there is another question in terms of the current duty structure on the imports of PSF and soda ash, and any change expected in upcoming budget.
So we don't know regarding the upcoming budget, but in terms of current duty structure, so PSF imports attract a duty of 7%. And as we manufacture through PTA and MEG, so PTA has 5% duty and MEG has 0% duty, but PTA is also available locally as well. So that's a duty structure of polyester. Soda ash, current duty is basically 11% is custom duty. Then there is additional duty of 2%, so 13%. And then there is a regulatory duty of 10%. So overall 23%.
I mean, and I have another question of my own on soda ash, and as in after the further expansion in capacity, what are the main markets that the company is exporting to right now?
So currently we are exporting. The biggest ones are, as I explained, Bangladesh and Sri Lanka, which are the biggest one. But other markets are UAE, Indonesia, Saudi Arabia, Afghanistan. We have also exported a minor quantity to China, Vietnam, Tanzania, Kuwait, Oman. So these are the markets, but initially volumes are low because we already have lower capacity in the current year. But next year, maybe these smaller markets may become big. And we are continuously exploring other countries as well. And hopefully we will do better in exports next year.
And has the company seen any kind of impact from the recent trade agreements with Turkey and Uzbekistan in terms of?
So in terms of imported product?
Yeah, both imports, input imports, exports on both ends.
Imports, basically, this year we have seen 0 imports coming in for soda ash business in Pakistan. So there were no imports this year of soda ash. And exports, obviously, we will explore wherever we have that potential and get those margins. We will obviously continue to export, and still the Bangladesh and Sri Lanka will be the highest one, I would say. But other smaller ones, the country which I named recently, will increase gradually. But it depends upon the pricing and the net retention which we are retaining after adjusting freight and all other costs. So that's a decision which company continuously makes.
And in terms of volumetric outlook, what is the outlook on the volumetric growth for soda ash?
So hopefully we will be able to sell somewhere between 530 to 560,000 tons next year as well, at almost at our full capacity. And maybe we are targeting probably 80 to 100,000 tons of export out of that, and rest will be for local market.
So, I mean, there were some issues in the gas, I think, availability. So, can you please tell us about the PSF production this quarter? As I mentioned, Lotchem had seen a temporary shutdown for a month due to non-availability of raw materials.
Yeah, so luckily polyester business operated at its full capacity. We had the supply of PTA and MEG continuously. We imported certain portion of our PTA. We import MEG already. So polyester business was not impacted because of non-availability of raw materials. So polyester business operated at full capacity in last quarter. It operated based on the fuel mix of gas and furnace oil because it's part of textile chain, and textile chain had that subsidized gas of $9 per MMBTU till April. So it continued to operate it on that level. Yeah, so there was no impact either on our polyester business nor on our soda ash business in terms of operability. So we operated at full capacity.
And I mean, what kind of impact are you expecting after the end of these subsidized rates on gas?
So yeah, this impact of removal of subsidy obviously will be significant. Now we have to see what the RLNG prices will be and how the coal prices, which are already coming down, because we already have coal-fired boiler at polyester business. So we obviously will if coal and furnace oil gas price delta is significant, then we will start our coal-fired boiler at polyester business. But still, time has to tell that which fuel. We are continuously monitoring all the fuels in terms of which one is a viable and better option. Currently, we are running on furnace oil and gas, and hopefully in future, if coal comes down and LNG prices increase and furnace oil increases and delta increases, we will get converted to coal-fired boiler. So we'll be able to mitigate the impact of this energy on polyester. But yeah, there will be an impact. There will be an impact on it.
And what kind of margins is the on gross levels are actually expected currently and during the next year for both polyester and pharma segment? If you can give us some guidance.
Yeah, so what we are seeing is that we will be stable in terms of margins in both soda and polyester business next year as well. There will be one impact of energy which no one can tell, and that is mostly in polyester business, because we are moving away from this subsidized gas to normal rates. But we see consistent gross margin percentages for next year, as we have seen in current 9 months, and hopefully same for polyester. And polyester business is a very tricky one, because you will never be able to tell what will be the gross margins for next 15 days or a month as well, because the regional margins are so volatile that you can't actually predict that thing. But yeah, this year we haven't seen any significant trading gains in polyester business, which we saw last year. So hopefully this year's performance, barring that energy cost increase, will be able to.
On the energy issues, I mean, we all know the kind of problems that we're experiencing because of the external competitiveness and energy security. What is the company's broader strategy to avoid and improve the energy efficiency beyond the current coal projects?
So what we are doing is that we are continuously benchmarking ourselves with other players. We are looking at alternatives. Actually, first of all, we can segregate that in soda ash. We are totally operable on coal-fired boilers. So we are almost sufficient for our soda ash needs in terms of coal-fired boilers availability. and only gas is used when any boiler goes into maintenance, which is very minuscule amount. So mostly soda is manufactured on coal. Now coal, we normally compare coal prices. We used Afghan coal as well during current year. We use imported coal as well during current year. And in terms of imported coal as well, we see many qualities such as RB1, RB2, RB3, and compare which one is the most efficient in terms of our usability at plant. So we obviously do these kinds of analysis before operating and try to maximize on the efficiencies which are coming in. Now the others, the coal-fired boiler, which I recently explained, which will be installed in the coming year, that will be more efficient compared to our initial coal-fired boilers. So basically, once this coal-fired boiler gets installed, you will see further efficiencies in our energy costs in the years to come in soda ash business. In terms of polyester, obviously, we have all three sources of fuels available, which is furnace oil, gas, and coal. So we can use based on whichever is efficient at any point in time where we can.
Right. So a lot of interest is coming on the pharma business. I just wanted to know, as per understanding, the recent price increase allowed by the government are going to be there till the FY24. So in case there is any increase in inputs, what is the strategy around mitigating or curtailing the pressures?
Yeah, so basically what we are doing that obviously our volumes are increasing, pharmaceutical volumes are increasing, our market shares are rising. We are continuously introducing new products as well. So obviously the fixed cost portion will get better absorbed with higher volumes, and obviously that efficiency will come in. Plus, we are looking at our packaging as well. We are altering our packaging in terms of reducing the cost, and so we are doing cost saving initiatives as well. And obviously, this cost increase, which has happened over the last 1 to 2 years, can't be completely mitigated with this price increase which we have got. But still, it will be some breather. Plus, some things will come up in terms of cost efficiency, in terms of improved packaging, efficient packaging, higher volumes, lower fixed cost absorption. All such things will help us.
Okay, so again, something that is really a big issue right now for all the companies. What percentage of your imports are being allowed against the exports made by the company? How much is the pressure in terms of imports?
So let me tell, the pressure was significant. If I go back 3-4 months ago, pressure was significant, and we were not being able to open LCs like we used to open previously, that we have to transmit an LC today and it got opened today. It didn't happen. It took weeks to open LC at that point in time. But obviously, we managed our working capital cycle in such a way that our operability of plant didn't got impacted. Current situation has eased out a bit, and comparatively, it's easier to open LCs today as we stand. And though it takes time, it is not that easy. But again, as I have said, that we are operating in essential sectors. So let me explain that polyester is part of textile chain, which is exporter. So export-oriented businesses get those benefits. Pharmaceutical is allowed as per the essential criteria of government. And soda ash actually exports, and based on those exports, we get a benefit for those. Plus, we got the foreign currency inflow of Nutrico as well during the year, which helped us in managing certain LCs. So yeah, we are able to open LCs, though the process is not that efficient and effective as it was previously, but we have not suffered because of not opening of LCs, and we have managed our working capital cycle in such a way that we didn't got impacted.
Right. So in coming back to the pharma business, I recall we met the company around a year back. Company had a very long and comprehensive list of drugs that were in the pipeline. So if you can, give us some of the new launches that were made recently and some of the new launches that the company plans over the next 6 months to a year, and major launches
Yeah, so basically we have been launching since last 3 years. We have been launching 6 products on an average every year, and we have seen many products which have been very large success. Such as this year we have Veroclav, we have launched Etipro, we have launched multiple other products as well, such as Isopaz. And so basically, we are continuously launching six products on an average, and this trend will continue. So over the current year, basically 22-23, if I would say that the products which we have launched since last 3 years have generated a top line of around 700 million rupees. So that's significant. The new products only 700 million out of you can see 9 billion is turnover. So around 8% or 7% of our top line consists of new products. And these new products are actually high margin products, and those high margins actually are improving the overall profile, or I would say the gross margin situation of our business gradually. Yeah, and this trend of 6 products approximately will continue in future as well. And there are many products in pipeline, but again, it depends upon many things such as registrations, what is the market situation, when the packaging will get ready. But this 6 products, approximately 6 products trend will continue in future as well.
So, coming to the slides that you were showing, we saw that you plan on the master batch expansion in the chemical segment, and also a new medicine plant in the animal husbandry segment. Can you please give us some details on the
So
size?
these are actually small investments. Actually, master batch extruder will cost around 200 million to 300 million somewhere, and it will enhance our master batch capacity. Currently, in the current year we are targeting that we will produce around 2200 tons. Next year we will be reaching at our full capacity approximately 2500 tons. So this extruder of 200 to 300 million rupees approximately will enhance those volumes in the year following the next year. So as the growth continues, so this is a small investment. This is not a major one, I would say. Again, this animal health facility is already available. It's leased from a lessor, but in future probably we will be having our own manufacturing facility, which will bring in efficiencies in terms of cost of manufacturing, and which will be help us to launch new products which are at higher margin, have distinct presence, and obviously it will help us to take our growth to next 10 years that we plan in animal health business. But again, it will be a small cost. It will be around 5 to 600 million rupees compared to overall scheme of things.
And what the dense ash expansion also is going to be of this, the same scale, or is it going to be large?
So dense ash expansion will not be that significant. It will be somewhere around 1.5 billion rupees. It's not a significant investment, because we already have the light ash capacity. Now, dense ash is actually converting light ash through further processing into dense ash. So that will give us further leverage in export market as well as in local market to maneuver the products between light ash and dense ash.
I mean, after all these expansions and all these BMRs, etc., what kind of energy requirements are there would be there for both the soda ash and the PSF business?
Yeah, so energy requirements are significant, obviously, because if we can see the current prices and the trend which we are seeing, because energy is completely imported, it's not local. So if we see in our soda ash business, our total manufacturing cost, I would say that 60% is energy cost of our total manufacturing cost. Excluding the fixed cost, I'm saying about variable manufacturing cost, approximately 60% is energy, because coal has increased in prices significantly over the last years. Plus our rupee devaluation has also played a role. So yeah, energy requirements would be significant, and polyester energy requirements are comparatively less. I would say that it would be, if I compare in terms of selling price terms, yeah, it would be around around 10% is energy of the selling price. But soda ash energy is significant in terms of total variable manufacturing cost. 60% would be energy.
And what is the update on the dumping threat that was there from Turkey for the soda ash business?
So yeah, dumping threat was there pre-COVID, I would say, because when there was global economic crisis, when we were seeing at some point in time pre-COVID levels. So yeah, there was not such a demand in the world, and the threats were there. And obviously, since then, the world has seen a significant change due to sustainability-related initiatives. Many plants have been uh, slowed down in China. Many plants are being not run at full capacity. Plus, demand has increased significantly after COVID levels. Thirdly, we have seen a duty structure in Pakistan. So we already had 13% duty on soda ash, but 10% RD has been imposed recently. So, and freight levels have increased significantly, obviously because of fuel prices, and soda ash is a bulky commodity to carry. So it's expensive to carry, and to carry not only internationally. After reaching at Karachi port, you have to carry that product to Punjab, and local freights are also not less these days. So yeah, that impact is now, for the time being, it's not available, and that's why we are able to export, and our exports are highest at highest level in what we have seen in past years because of that. The situation of dumping is not actually existent at this point in time.
What was the quantum of exports to India, this pre-restrictions?
So yeah, actually we were able to export around 3,000-4,000 tons almost to India. Very less in terms of quantity, but obviously those were the only exports at that point in time. Now trade ban with India, we are unable to export to India, but if trade ban gets lifted from India, again, that market will be available, because through Wagah border, it's very easier, and in terms of freight efficiency, it's much viable for the importers from India as well as for us to prefer that market.
I have a question from one of our clients, and he wanted some guidance on the Cosivac D2 vaccine sales in the animal health segment. So is there any update that you can please, or any guidance that you can give to the...
Well, actually, this is a difficult one because we have many products. I'm not...
I understand that.
Improved sales in animal health segment. Yeah, Coxivac D is one of the running products in animal health, but obviously it's not, we can say that it's one of the significant product in terms of the overall turnover of animal health. Because we have Farmer's Choice brand under which we sell all the products. And in terms of top line, Vanda and silage are still the major ones in terms of top line. In terms of bottom line, yeah, the margins are higher in the poultry medicine segment, which are significant. But yeah, Coxivac D is not that significant a component in the overall top line of animal health.
And very recently we have seen improvement in the ties, but rather improvement, we'll say we have been easier with Iran. We have seen the Prime Minister meeting the leader of Iran. We have seen a lot of influx in grey market, and now we might be able to see some actual official trades with Iran. Has the company done any kind of research on the kind of potential or threats due to this potential improvement with Iran?
So basically, I would say that in terms of current structure, we don't see any major threat on our company in terms of opening trade with Iran, because two biggest businesses for us are soda ash and polyester. And at soda ash, we are fairly competitive in terms of international cash conversion cost, I would say. And that's why we are able to export as well in international market and able to get and fetch good margins. So I would say no significant impact on soda ash. Polyester, obviously, again, no significant impact, I would say, because regional margins will play the role which they used to play previously, but Iran will not be able to impact any significant impact on our business, actually. Pharmaceutical, again, no impact on pharmaceutical, as you are aware. In chemicals, probably maybe some small items, but no significant impact, I would say, coming in from it.
On the Morinaga business, I mean,
So Morinaga is a branded business and sells with the brand name of Morinaga. Obviously, now we have uh, Japanese people who are running it, and now they will be more inclined to launch new products, which was stuck up at initial point in time because brand was theirs and controlling interest was ours. So now that has been sorted out probably, and hopefully we will see good growth in the years to come. But the recent impact is basically inflationary because the costs and selling prices of these products have increased significantly. And obviously, if you can benchmark from other industries as well, so volumes are getting impacted all across the board despite the higher margins and higher pricing, but volumes are not coming in. So yeah, this will be a tough time for few maybe months or a year or so. And probably when inflation will get controlled, situation will start to.
I have a question from a client, and he's asking on the per ton cost, power and fuel cost of soda ash and the PSF.
So per ton cost, how can I compare? Because normally we have
Cost and the requirement.
So requirement, I've said already that almost variable manufacturing cost 60% is the energy cost, almost. So the requirement is there. And basically we have 5 coal-fired boilers all operate at different efficiencies. So obviously there is a mix which is coming out when which coal-fired boiler is being installed. But yeah, the cost is almost 60% cost is relating to energy. So that's a benchmark. And basically now what happens is that as we are carrying significantly higher inventory because of these LCs issues and all such issues. So basically there are certain increases and decreases in international market which play their role as well. Sometimes the coal prices come down, sometimes they increase versus our carrying cost. So there again comes a component of trading gains in those things as well. So you can't actually compare it in that simple way, but it's almost 60% of our total variable manufacturing for soda ash.
And I wanted to know a bit about the kind of margins that the company is making on the recycled PSF and virgin PSF. And if the company has any plans on expanding the recycled PSF business capacity.
So what we have done recently that we set up a recycled polyester fiber plant in last year at a cost of around 900 million rupees. And since then, the market has seen a decline internationally. Also, we have seen a decline in demand. So normally what happens is that customer don't still want to pay higher for recycled fiber. They want recycled fiber at the same cost. And they are expecting that recycled will be cheaper. Actually, it is not because we collect PET flakes, then we wash and convert it to virgin, as good as virgin fiber. But still, there is significant cost which has increased recently as well. So currently, I would say that approximately margins on PSF would be somewhere around 33 cents per kg. I would say 30 to 33 cents per kg. And recycled fiber would be also be in the same ballpark range. But obviously, still, this was a sustainability initiative which we started because there was a requirement from our customers to provide the recycled fiber because their customers were asking for recycled. And hopefully, as the sustainability and green initiative trend will continue to improve, we will see good going in this business as well.
We are almost at the end of our conference. I would request Atif Saab, if you have any concluding remarks.
So yeah, concluding remarks. So if we see, we are company LCI is fairly dynamic, diversified, and significant cash generating ability through our portfolio of businesses. And we have seen over the years that any one of the business comes in and performs and takes up the year significantly. And that has given us an opportunity to continuously pay dividends, to grow, and still carry a very minuscule amount of debt. And hopefully this trend and this legacy will continue. I would say that this is a very good investment for investors in terms that very good structure, I would say, where owners and professional managers are separate. So minority investor would be sitting in the same board as owners are because they are not part of the management. So very good governance structure, a very preferred one internationally as well. And obviously, this organic and inorganic growth journey will continue for the company in future as well.
Thank you, Atif Saab, and good luck for the future. And thank you to all the participants for joining the meeting. We will be back tomorrow with another key chemical player of Pakistan. Once again, Atif Saab, thank you so much for taking our time for us.
Thank you. Thank you. Thank you. Bye.